Welcome to the annual Risks and Trends Conference organized by Polityka Insight. This year, unfortunately, we only have a virtual online conference, but I hope that this coming hour will be very interesting for you. My name is Adam Czerniak, and I am the research director and the chief economist of the Polityka Insight, and I'll be able and pleased to lead you through the world of banking and finance, answering the questions whether the banks have already uttered their final word. First, I'll speak to Antony Cahill of Visa, how from the perspective of a payment institution, but also a perspective of the former banking employee, will be the structure of the financial market of the future, what will be the role of fintechs, financial intermediaries. Then Piotr Sobolewski, the senior financial analyst, will speak to the president of the Pekao SA, Leszek Skiba, what is the strategy of Polish banks in the coming years, what they are most afraid of, and what decisions they will make to mitigate these concerns. Finally, we will speak in a discussion panel about the future of the sector. We will wonder what will be the role of fintech, what will be the role of the banks, not only from the standpoint of the participants of the sector, but also from a philosophical perspective. I invite you.
Now, let me introduce our special guest of this blog. On the other end of the line is Antony Cahill, Visa Managing Director for the European region. Hi, Antony. Can you hear us? Are you with us? How are you?
Hi, Adam. Yes, I can hear you, and it's great to be with you today.
Wonderful, wonderful. Great to have you here with us, Antony. And today we'll talk about a little bit about the future of the banking sector and how you view it as one of, let's say, the market makers, really, because Visa is one of the companies that facilitates the market and its operations. So you are at the heart of the transformation of the financial sector in which it's becoming more digital. Recently, I've read a very interesting report of Visa about open banking. So open banking is a recent trend that, as I look from Poland, is more popular in Western European countries than in Poland. But first of all, could you explain to the Polish viewer what is open banking, what is the whole idea, and why are banking becoming more open, and is it safe?
Yeah, certainly, Adam. So open banking really is the result of a couple of things that have taken place, I guess, over the last 5 years or so. One has been there have been changes in the regulatory environment. So we've seen some changes in the regulatory environment in terms of how customer data can be accessed and used by trusted third parties. So it allows consumers to give permission for third parties to access and use their own personal financial data. And that can be both for reporting purposes, but it can also, under PSD2, it can actually allow third parties to initiate transactions. Now, how that takes place from a technical perspective is really around the use of what we call APIs. But effectively, at its simplest, that's a technical approach, technical architecture that allows these third parties to be able to access the data that's held on consumers by by institutions such as their banks, etc.
Okay, so why are banks engaging in it? Because data in the modern world is a capital, is something that's one of the most valuable assets that you have. So why are banks opening up? What is it in them?
Well, I always think about this in two ways, Adam. One has been, there has been a regulatory requirement for this to happen. So, if you wanted to look at it from one perspective, the fact is that banks have been required to make their data available externally through an API framework. But I think from the other side, the fact is, many banks are now looking at this, and I think initially some banks would have thought, to your point, gee, this is our data. This is an asset. We don't want to make this available. Should we do this? And I think that's quite understandable. And I was a banker for 22 years before joining Visa, and so I went through this journey myself. And when the open banking environment first started to come about, I was in Australia at the time, and we thought about this very deeply. But the fact is, I think many banks now are starting to both recognise and understand that actually there's an opportunity here to take data in, to actually ingest data, and to they themselves to think about how can we use this data to both promote different products and services to our existing customers by accessing the data that they have potentially with other third parties, and or to actually go out and acquire new customers. So I think what started very much, certainly from a traditional bank's perspective, where, let's face it, that's where most of the data was, you've sort of gone from this defensive mindset now to increasingly seeing banks and financial services players saying, actually, there's a real opportunity here for us to use this data, and for us ourselves to be able to mesh that to the data we already have and approach our customers with better products and services, be that credit scoring, be that, hey, Antony, I've noticed you're using services somewhere else with a third-party provider. We've also got a product or service. Would you like to try that? So I think it is very much now you're sort of seeing that defensive mindset to begin with, but that is shifting.
Should the Poles be afraid of opening up their data, and, for example, a company from China at this moment can read their personal information? What have they bought yesterday?
Well, I think a couple of things to remember here, Adam. One is the consumer has to give their consent. So the consumer obviously, is interacting with essentially a third party or whoever the entity is that's seeking to use their data. And they're being asked to give their consent. So I think, for a consumer, they always have to think about, is this a brand that I trust or no? Is this a company that I know or trust? So that's the first part from that consumer perspective. Secondly, there is a regulatory framework in place. We have GDPR. We have that regulatory framework that's there to ensure consumers are protected. And thirdly, the fact is the banks themselves are always sort of working to ensure that the third parties that are seeking to access their data are in fact authorised at doing it in the correct manner. For me, I think you've hit on a really important point here, though, in relation to open banking, which is all participants in the payment system. It is imperative that consumers feel that their data is being treated appropriately, it's being handled in the right manner, that it's safe, it's secure, and it's resilient. So it's incredibly important that is maintained. And I think if that was lost, then that's a real challenge for everybody. So that for me is one of the most important questions that does have to be asked. And obviously regulators have an important role to play here to ensure the right frameworks are in place, and that we don't have bad actors, we don't have nefarious actors sort of within the payment system, and or even companies with good intent. They have to ensure they've got the right processes, procedures in place. One of the things that we've seen with the pandemic, Adam, is globally, when we often get asked about what's happened with fraud in the last 12 months. And from Visa's perspective, we've seen the use of contactless increase around the world. That's happened significantly. The use of electronification of payments has really picked up. Fraud levels have stayed the same, or in actual fact dropped, in relation to the use of card. But what we have seen in relation to e-commerce, for example, is lots of different cyber attempts and different bad actors that are trying to access data, etc. So it is really important in open banking that those security principles are adhered to.
You mentioned a very important point, and you mentioned a very important actor in the whole field, which I think is even more important than a couple of years ago, the regulators. Nowadays, regulators are kind of market makers. So they decide, in fact, who can enter and on what rules can enter the market. And do you see a risk that the banking sector will, with the help of regulators, protect themselves, so that open banking will be just a PR framework, but in fact they will hesitate to give freely their data to third-party financial institutions? So do do you see that risk, that banks will use regulators to protect themselves in the competition with, for example, financial technological companies?
Regulators, they have a really important role to play here. And so when you think about large traditional commercial banks, and let's take Poland as an example, one of the things actually that really impressed me when I joined Visa Europe was actually how innovative the Polish banks are as a whole. So when I look at Polish banks compared to many other banks around Europe, highly innovative, they've got pretty modern technology stacks. Their mobile applications, for example, are first class. So they've actually got a really good customer offer. They're large entities, they've got significant balance sheets, they've got the trust of their customers, they've got existing relationships. So they have many strengths. But one of the things that banks have said around the world is, look, with open banking and with the rise of fintech, hey, we have to have a level playing field here, because we have to ensure that those new entrants are required to follow certain standards, that they do need to behave in a certain manner. Otherwise, that becomes an uneven playing field for us. And in actual fact, we're potentially going to be providing the infrastructure for others to use, and we don't get to make appropriate returns. So I think there's very much two sides to this particular argument, and regulators have to find that sweet spot where they certainly create conditions where new entrants can come in, because I think it's good to have challenges. Competition is good; it makes everybody lift their game. And certainly in a number of markets in Europe and around the world, we've seen the rise of new competitors into the marketplace has seen existing players lift their game, lift their standards, improve their offers. So I think competition is good, but at the same time, it doesn't need to be a level playing field. So let them come in, but you also have to ensure that traditional players feel that actually, look, yes, bring competition in, but don't make it unfair for us. So I think this is part of the rough and tumble of business as well. Traditional banks will be thinking, how do they compete? How do they continue to grow? And regulators, I think, by and large, will find their way through this in terms of looking for that correct balance. Because ultimately, this has to be of a benefit for consumers and the whole ecosystem. And as we go back to that earlier point, one of the things that regulators do have to ensure at the end of the day is the integrity, the security, the resilience, and the trust in the payment system, because that's required for everybody on an ongoing basis.
You mentioned that Polish banks are innovative. I agree with you.
Yeah.
Do you see a risk that the banks will want to, build only on their own fintechs, and they will be some kind of excluding newcomers from other sectors, from other countries? How do you assess that?
Not necessarily, Adam. I think the banks will seek to play to their strength as they should. But if new entrants come into the marketplace, and from my perspective, what is the solution that they're bringing to the marketplace? What's the pain point they're solving? How are they differentiating? How are they seeking to give consumers a better experience? If they can demonstrate that and they can deliver that, then I think the Polish banks will sort of look at that, they will evaluate that, and if it makes, if there's a clear opportunity for them to work with a fintech, for example, then they'll probably adopt that and take that to market. Now, if a fintech is looking to compete directly against banks, then I think that will be, we'll see different use cases emerge. Sometimes a fintech will look to compete directly against an existing player. Sometimes a fintech will look to collaborate with an existing player. Then that's where regulators, will come in, and that's where, at times the regulatory environment will say you are required to make the consumer's data available through APIs, assuming the consumer has given the appropriate consent. So, for me, the regulator is there to set that environment up, and then let's have competition, and that's one of the things that at Visa we've been very clear on as a network. We encourage competition. We greatly value the relationships we have with all of our existing clients in Poland, but we also view competition as a good thing, because the payment system needs to keep evolving. We need to keep ensuring we move together, we move forward together, and we improve existing products and services. Because one of the interesting things is, Adam, is cash in Europe as a whole is still nearly half of all consumer transactions, and so there is this enormous opportunity still for the payments ecosystem to continue to grow, to continue to evolve. And there's actually room for everybody as long as we're actually delivering a better customer experience.
is banking, open banking, possible without banks?
So I think if you go back, your question of is open banking possible without banks, then technically, in terms of what open banking is, then yes. I think your question is probably more of, can I imagine a future without banks? Personally, and again, as a career banker, my view is I think banks still have an enormously important role to play. I think they're integral to the economy. They have been for many hundreds of years, and I think banks are adapting. They will change. They are adapting to the environment. And banking isn't just technology. I mean, technology is an important component of that. Credit management, banking is about having a license to operate. Banking is around risk management, etc. So there are many elements to banking that go beyond just technology. So my personal view, Adam, is open banking as a capability. Yes, you could do it without banks today, but will people choose to conduct their financial lives going forward without banks? Personally, I don't think so.
You said that banks will adapt. How do you think this adaptation will go on? So in which ways bank will adapt? Because I think that the keystone of the banking system is the personal relationship between the bank, between its employees and the customers. Right now, in the era of fintechs, the relation is based between you and your mobile phone. So how can banks that are based on this fundamental human-to-human relationships, how can they adapt and how can they compete with this changing of the whole financial system?
Yeah, look, I think there's many elements to this. I'm like you. I believe banking is still very much a personal element to that. Now, of course, you can have that personal element coming through in terms of personalization, using a consumer's data to get to know them better. So that is one element. But I still think today, for many people, if you're taking out a mortgage, for example, or a business is securing a loan, that's quite an emotional thing to do for an individual, and quite often they still want to sit down and have a conversation with a banker, with somebody they can trust who can give them advice. Now, that doesn't necessarily have to be face to face. Now, that could be over a video monitor, for example. So, I think things will change there. Many banks are thinking about, what does my physical network need to look like in the future? Today, many branches are still used for cash handling and for other activities that are quite intensive, but you may say, is that really value adding in terms of my customer relationship? So you'll probably see lots of branches move to being more of an advice-based environment where individuals can go to seek out advice and for that real value-add conversation. Those branches may increasingly become equipped with video facilities, for example, so you can have that video conversation with a customer if they're sitting at home. So I think that's one significant element. A second one is, banks are very much now increasingly thinking about, how do I, though, design my products and services for a digital age? Because notwithstanding that personal element is very important. The fact is, and again, I can say this from personal experience, so I wouldn't pretend to know precisely how the Polish products and services are delivered, but I can talk from personal experience. Many of our products historically were not always designed, thinking about the natural data flow for a customer in terms of how do you fill in the application form, for example. Many of those forms were designed for a paper-based form environment. When you're thinking around digitizing the process and having it on a mobile screen and the ability to reach out to trusted data sources, be that for tax file numbers or for KYC, when you can reach out to central database or repositories, or smart forms where you can actually start to pre-populate for consumers. Don't ask the customer to put the same information 2 or 3 times, which traditionally many of those paper-based products and processes may have required a customer to do that. So I think banks are working that part through. A third one is banks are very much thinking about, how do we become more agile in a digital world? How do we enable ourselves to change rapidly to external market conditions? So they're just 3 changes that I would name that I think banks will work through increasingly to ensure they not only remain relevant, but actually they continue to be highly successful as we move forwards.
Okay. Thank you, Antony. Thank you for having you here with us. It was a great pleasure to talk.
That's my pleasure, Adam, and thank you.
We will talk about the future of banking sector, and I will speak to my guest, Leszek Skiba, who is the president of the management board of Pekao BP, the second largest banking group in Poland. President, before I will ask you about your vision of the future of the banking, please tell me what's the shape of the banking sector. What are the main concerns on the minds of a president of a large bank? Good morning. Well, the banking sector today is facing a lot of challenges. Of course, we are waiting until the end of the pandemic, when we will see economic recovery and more demand for the loans. And this low demand we see especially in case of companies, because they are waiting for a moment when they are able to take more risks and invest, and we'll see some prospects for recovery. But there is a number of fundamental problems, especially in Poland. One of those burdens are the loans denominated in Swiss francs, which continue to make the potential losses resulting from the abusive clause and litigation can be significant and can have a negative impact on the results, and also impact on the way the banks think about their future, because this is the burden which also constrains the possibilities of consolidation, and also technology. Rivalry for the future of the banking sector. Everyone, all the specialists that we are talking to are of the opinion that the banks are in a difficult spot, because they face challenge from fintechs, and if the banks are not making progress, they are bound to lose. You've mentioned about corporate loans, Swiss francs loans, and also technology. Let me ask you about very low interest rates, which in Eurozone right now are at the minus level. The Western Europe has been able to accustom, because it's been around for many years. In Poland, it's a new phenomenon as a result of the pandemics. How the Polish banks will be able to accommodate it, what the Polish banks can do about it. Well, a standard answer is similar to what we've seen in the Western Europe. So first, cost control, and also analyzing your network, how many subsidiaries and branches should be kept, because many of the customers are migrating to the remote channels and are able to talk through call center, and they are no longer visiting brick and mortar outlets. So this is the question to the banks: how many branches should stay, how to optimize them, how to also optimize the cost. There's another element, which is consolidation. Spain was characterized by a large fragmentation, and many years after a crisis it went through a consolidation process, which meant that if you have less headquarters of the banks, then the banking sector costs less. Also, digital transition is quite costly, but generally the concentration and consolidation is advantageous for the whole banking sector. So I think this is a response, and it is a kind of saving instrument at the end of the day. But of course there is this whole discussion about the free banking, that this period has come to an end, that it means that the banks will strive to impose the fees and commissions where certain services, for example services connected with cash, are costly. I think this is the path that we are going to go down on, and the banks are rivaling with other modern entities. For example, Revolut has introduced the subscription banking. So I think this is the future of the banking sector. Okay, where are we in all these activities? Because in 2020, when we saw the first reports on the results were very weak, very low. And the question is whether the banks will be at the mercy of the pandemics and low interest rate, or they are just starting to be on the offensive, change their business model. You've mentioned about limiting the network of branches, about consolidation, about the fees and commissions. But I was just wondering whether it will be impacting the results of the banks, or whether this is the foundation of the business model which will work out in this demanding environment. Well, as a matter of fact, what we've been conveying to the market is that if we see the rates at the current level over many years, then the cost of capital, which is ROE parameter close to 10%, will not be seen in the sector in the coming years. So the low interest rates will mean a quite low level of revenue on equity. Also, on the other hand, we'll see some revaluations of margins, which may be an important factor, meaning that the banks will try to increase their margins. Let me jump in. What do you mean by revaluations of margins? Right now, what we see is that this is what the analysts are telling us. We see quite an excess of liquidity, but when the economic recovery comes, when the demand for loan increases, the limitation of excess liquidity will mean that the loan margin will increase slightly, but it will increase. So what the customer is paying more than WIBOR. And I think this is the process which may take place in the coming years. If we see economic recovery with low interest rates, the banks, we will see the limitation of excess liquidity that may lead to increase of the loan margins. But we are talking about slight increases, so it's not a radical change, but it will also mean that the profitability of banking sector will increase. This is what we can project. But as you've said, within 3 or 4 years, there is no chance to return to ROE level from the past. So this is a challenge for the sector. It will mobilize, and also Swiss francs loans. It will mean that the whole sector will not be very profitable. President, you've been talking a lot about the technology, and the pandemics muddied a lot of waters in the banking sector, but it also increased the digitization of certain processes. It's been a standard to have selfie accounts, to have the remote signatures. If we were able to do it so quickly during the pandemic, why it wasn't introduced earlier? I think there are 2 reasons. First, when we think what is the main source of customer acquisition, well, and this is the challenge for the banking sector, the acquisition of customers through a branch is the main source. So when we introduce a process whereby a customer is never showing up at the branch, then we are losing an opportunity to meet this customer, and the banks need to learn it, and it was a motivation and mechanism to make sure that the process of granting loans conduct in such a way that the customer is not being invited. Before the pandemics, there was this notion that it is better to invite a customer to a brick-and-mortar branch, of course in a way that he doesn't treat it as an inconvenience, But this kind of thinking was there, which led to this kind of pressure. And the second thing, the bank has always a lot of things to do in terms of IT, and I don't think that it was treated as a priority on the list of the goals to be pursued. Always creating a new app, streamlining the service process of the credit analysis or CRM processes, which is all about the description of a customer and acquiring the knowledge about the customer in order to be able to address products in the optimal way. These were larger priorities than introduction of electronic signature or self-accounts. It wasn't so high on the priority list as part of the limited resources. Following this technological implementations, other banks better ready to compete with fintechs and big techs, which are entering in this sector. Are you able to fight with them? I think so. The banks are institutions which have large IT budgets, and this is a good opportunity not only to fight with fintechs, but to achieve some synergies. And we as Pekao establish a cooperation with a national payment integrator as part of TPay system, and this is also an opportunity to make sure that we have cooperation with other entities on partnership basis and to offer such services to our customers and to achieve synergies. We will see that the fintechs will be around, and the bank should be a kind of integrator of this relationship between a customer and this kind of fintech. For example, we are offering to our e-commerce customers an ability to use TPay on preferential terms, and our customers are already taking advantage of this. We see first implementations, and we are going to encourage our customers to take advantage. The banks are using these opportunities. There is also a possibility to use some additional functionalities. In 10 years, the banks will be institutions which will be offering various services to its customers, and an application will be just a fixture. We all have the apps, and these apps will be offering a lot of functionalities. And of course, the banks need to have their eyes wide open and to find new opportunities. But since you can cooperate with fintechs and achieve synergies, it is difficult to cooperate with challenger banks, the new entities which are springing up in the UK or which are going to be launched in Poland, and when they are created, they are never opening any brick and mortar branches. They are in clouds, they use blockchain. Other traditional banks able to reinvent themselves to compete with them because you have larger costs than challenger banks. Of course, this is an important challenge. We can see that a demand for entities just like Revolut is there, and the banks need to continue to evolve. Traditional banks need to become more competitive and attractive. However, in case of corporate customers, then the new banks are not able to cater for all their needs. So I think that individual customers is a field when they will compete so fiercely. Of course, every year brings a new set of information. So once again, you need to keep your eyes wide open to take a look at the state of play and try to march on with resolve to make sure that you don't lose in this fight. Well, we talked about fintechs, challenger banks. Let us talk about big techs, because here the banks seem to be in the losing positions because they don't have so loyal customers who are using these applications quite often a day. They don't know so much about their customers. They don't have these intuitive application as big techs have. And I'm referring here to big techs from Silicon Valley, from the US, and also those from China. How the bank can fight to attract the youngest customers who have grown up in these social media services. And they are very loyal. Of course, this is a challenge not only for the banks, but for the overall sector and stability, because it is important to remember about the notion of a new currency of Facebook, which is called Libra. We are not taking a look only from the standpoint of the banks, but also central banks and regulators. This is quite a challenge, which means that the field of the play is slightly different, and the banking sector is actually in a disadvantageous position. These are formidable challenges. There is quite a lively discussion about the question whether this is a banking system or this is a payment system. The transactions in Libra look more like a payment system, and we don't see any money creation, which is natural from the banking sector. So you have here a natural constraint, and so far they haven't offered any loans, but if they do, what will be the stability of this new currency system based on Libra? But we see a lot of challenges. Only then the universal banks may think how to address this challenge. Of course, a simple and insufficient answer is that, and we've seen it for many years, the banks are trying to implement its applications and its solutions in applications in such a way so that a customer which is only able to focus 8 seconds, not 15 seconds, is able to accept certain solutions. We have to change the thinking about the offer and communication to adjust it to a different worldview. That's a first point. This is a great challenge because there are no easy answers here. This is all through the trial and error method. You also have regulators on your side who make sure that there is financial stability on the market. Recently in China we heard that Ant Financial, which was preparing to IPO and is an operator of Alipay, will be regulated just like banks, which increases its valuations and profitability. I wanted to ask you about the banking itself. There was this famous Bill Gates citation that the banking sector will be needed in the future, but we don't know what will happen to the banks. What is your perspective? The PSD2 service, which enable fintechs and challenger banks to connect to the bank plugs, enable also to use the data of their customers. Right now it is the banks which are taking advantage of it because they are offering the aggregation of accounts, but as the time goes by, the fintechs and challenger banks would like to jump on this bandwagon. So what will happen with the banks then? Is it not that Revolut or some other solutions will be so closely connected with the traditional banks, and they will use the banking infrastructure to such a degree that the banking sector will be in the bankrupt. The customers will not come to the traditional banks, they will use these fintechs. Well, as a matter of fact, a bank is a bundle of services which is under one roof in an institution called the bank. But if we try to understand what is the most important activity or service, it is something which is connected with data management and a competence of combining data and knowledge with reference to customers, because deposit collections can be outsourced. We can have a number of branches, we can have a franchise system, payment services can be outsourced to fintechs, but at the end of the day, the banks have the possibility of combining all the information which they possess and impulses which are resulting from this information. Revolut is great at that. I mean, the situation where a customer who buys a trip gets a phone call from a call center with an insurance offer. So this is a symbolic situation whereby a bank has some knowledge about a given event, and this call center does not have to be owned by a bank. It may be a rented service, and this technological process, the insurance can also be an offer from a different entity with which Revolut cooperates, and the Revolut itself integrates these various elements based on the knowledge it has. So this is the essence of what the bank is. If the banks can reduce their activities, they should develop their competency in terms of offering the products at the right time based on the current event, because the customer will get the offer 5 minutes from some purchase or some event. I think this is the basic challenge. Do we need fintechs for that? Of course. Because the banks can offer some channels used by fintechs, but what will stay as a bank is as a capability to integrate all the knowledge and all the instruments that the customers uses. So I think this is how we should think about the bank of the future, because we are not talking about a network, about products. Sometimes we are thinking whether the banks can offer the products of different banks. And this is really a question, how to do it in an orderly way so that the customers are happy. with offered services. And with that, we will finish. Thank you for sharing your vision of the banking of tomorrow, and you presented the ways how the banks can survive in this demanding environment, but also how to increase their role. And now we invite you to take part in the further subsequent part of the financial panel. Thank you. Welcome again. For those of you who just turned on, my name is Czerniak, and I am the Chief Economist and Research Director at Polityka Insight. And this is a third part of the Finance and Banking block, a discussion about the future of the financial sector. Since it is a discussion and debate, we have a couple of panelists. We have an unusual set of panelists, female panelists, because usually when we speak about the finances, most are male panelists in various conferences. And here we have only women. Let me start with the introduction in alphabetical order. Weronika Kuna, who is the Public Sector and Government Relations Director, which is quite a complicated term. Microsoft Poland. Hello, Weronika. In our studio, we have Marzena Sokołowska, who is Chief Information Officer from Horum, and Dr. Agnieszka Wincewicz-Price, who is the manager of behavioral economics of Polish Economic Institute. Hello. Together, we will ponder about the future of the financial sector. As you can see, this is an eclectic set of panelists. Somebody would say, why such a selection? It is very purposeful because we would like to think about the future of the financial sector from various angles. We already talked with representatives of the banks, payment institutions, and right now we would like to talk about the way the financial sector, including banks, will develop in the future. And in order to answer this question, we need to take a broader view. And when I was proposing the title of the panel, I called it Cyberbank 2077. Unfortunately, it's been rejected, but I wanted to tell you about it because I was so proud of this idea. So I was thinking about what will be the shape of the Cyberbank 2077. In order to answer this question, we have to take a look at modern technological companies, but also from the big tech point of view, and also, which is especially important for me, from a philosophical and behavioral economics angle. So how this change will impact our perception of banking sector and its development. Let's start from fintech. My first question will be to Marzena. What is the current strategy of the industry development? Is it mostly focused on creating its own market, or there is a certain tension with traditional banks, or we have some kind of coexistence, a bit of competition, a bit of development of the new market, but everyone is benefiting? So what is the strategy of fintechs? When we speak about the strategy, we have to say what is its goal, and the goal in the financial sector is to provide or implement a product to make sure that the customer wants it, and then he or she returns with his friends or family, so to have a wide base of active customers. So the question arises, when will the customer comes back to us? So we've done quite a lot of research in this area, but let we cite Accenture. According to them, 75% of customers would like to share the data with us on one condition: we need to treat him or her as a human being, not a record in a database, and prepare a personalized offer. So now the second part. more than 90% of financial institutions is not able to fulfill this condition, and as a result, they are not able and provide these personalized offers. They are not able to provide a high level of satisfaction, which we call UX. If we couple it with our recent experiences connected with pandemic, so we all know that the branches shut down, people moved online, and we were all aware that some of them will stay this way, they will stick to mobile, but it turns out that 12% has never returned to the banks. These are McKinsey report data, and as a result, naturally, we see a certain idea for a strategy where one should operate. Mobile channels, open banking, data analytics, so providing this personalized offer. Fourth would be cloud, and the fifth would be blockchain. So all these elements tell us whether fintechs can effectively cooperate with the bank. I think we need to cooperate together. Banks had to open to us, and we are cooperating with them in order to fulfill the expectations of customers. Okay, with that, let me turn to Agnieszka. Are Poles ready for that? Are they ready to move online? Well, it depends on a group, mainly demographic group of customers. Young millennials and consecutive generations are, of course, very comfortable and cozy with technology. They don't have a traditional experience of the traditional banking, so they are not used to waiting in queues and filling out some forms. Older customers need some more time to transition to it, but our research on senior citizens show that even in the elderly 65 plus, use of the online banking services increases quite quickly. So these conservative concerns that these elderly are afraid of new technologies, or sometimes they are not able to use them, are changing fast and are becoming outdated. So in this respect, I think we are going to quickly join to other countries. But what may be a problem is a question of readiness to share data that Marzena mentioned, but the readiness on the side of the citizens. Right now it is about 44%. This is the highest number. For all or just younger? Well, it is pretty much comparable, and we were surprised that elderly, depending on what type of data we took a look at, we asked about how people are ready to share with public institutions. Weronika, now over to you. Big techs already have data. At least in case of big techs, people are more ready to share their data. So the question whether big tech is not a great eminence of financial sector which uses a backdoor to enter the financial market, and we are talking about fintechs and small companies which are competing with larger banks. However, big techs, which are bigger than banks, will just enter. They will create their cyber currencies, its products, and, well, will they not transform, revolutionize the picture of the whole financial sector? How do you see the position of big techs, which includes Microsoft, in the financial sector and in the future of the financial sector? Thank you for this question. Well, certainly one needs to order a few things. Let me start with the definition of big tech and Microsoft. Let me start from my background. We feel ourselves big and we feel ourselves tech. However, big tech in the world of financial services is slightly different. It's about combining financial services with personal services. So I will not be talking about it. But why are you not entering this area as a Microsoft? Well, it's not that we have nothing to do with the financial sector. If you take a look at what happened 6-7 years ago, when we saw an eruption of fintech revolution, and we saw a lot of challenger banks, issue banks, and fintechs. What happens later, and what's happening right now is a large absorption of new technology by banks, and the banks are opening to new technologies. And what enabled this was the common denominator was technology. So we would not have open banking, we wouldn't have had banks as a service if it was not underlined by infrastructure just like cloud, which enables all that. So the role of big tech as Microsoft is a fundamental as a provider of infrastructure. And I think that there's another important element, how very much regulations are impacting on us, just like financial supervision authority regulations. We are very much involved in this discussion, and this security which we provide and assure is very important. Let me also address big tech in terms of financial services. I would divide it into two areas. We can say about a big challenger, which was Libra, which is DM today, and that results from the fact that it wasn't a discussion that we would like to revolutionize. We would like to change the payment system, and just like telecoms were revolutionized by internet and the fact that we don't have to pay $1 per one SMS anymore, and we're not asking whether our SMS have run out in our limit, but we just share the messages. But this analogy during the course of Libra implementation, that we are not going to send one transfer, we are going to send these transfers just like SMSs. We are just sending them. And today we see it's not so easy, not so secure. But apart from one challenger of Libra, which introduced some intellectual contribution, we see a second wave. For example, in the US, Goldman Sachs, how they opened to open banking. There is more and more banks such that, BBVA, a Spanish bank. This is a crown example how one can develop great synergies between big tech, be it Amazon or Apple. In case of Goldman Sachs, these are mutual benefits. So for every of those institutions, it just completes their business model. One thing you said, which was very interesting, it's not a revolution, it's a change. So my question to Agnieszka, I already said I want to ask it. Are we actually talking about a change at the technical level, the way we pay, that we pay through app, not by cash, that we can click something on Facebook, maybe not now, but very soon? Is it a change or is it a revolution? Is it changing the way we think about finances from the philosophical and behavioral side? Will it impact the way we perceive banking sector and how we approach the banks? I think yes. I'm not sure revolution is the best word, but what fintechs have been offering wide range of various services is showing that these are not only financial services. It's not only about payments. It's not only about changing the experience of a customer and service design point of view. The idea is to show that the finances are serving a deeper purpose. When I hear about fintechs, which are called altruists, when I hear about women-led fintechs, and their mission is to empower women and include the people who are marginalized by traditional institutions. So we see that this change is at a deeper level. So the idea is to show that finances are just one instrument of our everyday life, that we can select a fintech which is investing only in carbon neutral companies, that some narrow ethical categories are taken into account. So moving closer to a customer on a very personal level represents this dramatic change in comparison with traditional institutions. I would like to subscribe to what just Agnieszka said. So far, the bank were not able to harmoniously cooperate with fintechs. 21% of the banks admitted, and I'm citing one of the surveys, that their systems are not ready to use the fintech solutions. On the other hand, though, 70% of the persons who are decision makers at fintech would say that there is no POC at the bank who would share the same culture, this nimbleness, because on one hand we have traditional banks, on the other very flexible fintechs. Weronika, what about the fintechs and regulatory issues? Will the authority, the regulator, won't have to erect some firewalls? So what about the entry of fintechs in context of regulations? The regulatory issues will be fundamental, and this will not be only regulations which are concerning in context of financial supervision authority. These will be regulations connected with GDPR and all the other digital market acts. So I think that we will see the encounter of two types of regulations, and the companies like us will have to face up to both to make sure that it is safe and secure. So I would like to remind you about a movie, Social Dilemma. It is a vision where we are going, and I believe that a human being is adjusting to technology, is learning technology, and has an ability to make a decision. And I think we'll be reclaiming more and more of our will in the confrontation with technologies. We will be able to be more selective about certain decisions, and I think that regulations can help. But if you allow me, I would like to also address to what my colleagues were talking about, this readiness of the banks to open and to be open to easily available external innovations. I have a sense that in Poland there is a specific situation. For years we had a sense, not maybe of superiority, sense of superiority, but we thought that our banks were so great because for a long time our banks were relatively innovative, and they continue to be so. However, this innovation locked them in the cage that we, the banks, are responsible for innovation, and I don't think they are willing to share this innovation spirit. I wouldn't say that the world is moving away from us, but we continue to see that in Poland the main innovation drive comes from the bank. great examples from Pekao. I'm referring here to what Marzena said, that the company needs to be nimble in order to be able to cooperate with this company. And I see that Pekao BP understood it, and the revolution it's going through to be able to come up with innovations, to be able to cooperate with providers of innovations, a great case, but it is still too little. And if you take a look at the examples of open banking in Poland, it is not something which is obvious. Thank you very much. Thank you very much for this conversation. With me in the studio we had Dr. Agnieszka Wincewicz-Price from the Polish Economic Institute, Marzena Sokołowska from Horum, and online we had Weronika Kuna from Microsoft Poland. Thank you.
Dziękuję.
Thank you for being with us, and I invite you to watch the remainder of the conversation as part of Risk and Trends 2021.